Forget about the speculation, forget about the clickbait about new laws that don't even exist. One seismic policy shift is detonating through the American credit system right now, and the fallout is creating four massive interconnected consequences that will determine whether you get approved, denied, or financially crushed by the rates you're offered. And here's what should terrify you. The banks, the credit bureaus, and the politicians all are pointing finger while your financial future hangs in the balance. Here's what happened. Back in 2018, Trump signed the Credit Score Competition Act, buried inside a broader financial bill that nobody paid attention to. The goal was to break the decades-long hold that FICO and three credit bureaus held over the American lending. For years, one company decided your fate, one algorithm, and one score. And they charged whatever they wanted because there was zero competition. But that law sat dormant. The credit bureaus lobbied hard. FICO played defense, and for 6 years nothing changed. Until now, starting in late 2025 and accelerating into 2026, the law is finally being enforced. The Federal Housing Finance Agency, the watchdogs over Fannie Mae and Freddie Mac, pulled this trigger, and the entire credit scoring ecosystem is imploding in real time. You have been probably seeing videos claiming Trump is canceling FICO or that 4 new credit laws are coming in 2026. That's not what's happening. This isn't about the new laws. It's about one 2018 law finally being weaponized to force competition into a market that was designed to have none. The battleground is your mortgage. Mortgages are where FICO made its billion. Over 90% of lenders use FICO score for mortgage approvals. The bureaus collected the data, FICO scored it, and together they control the entire pipeline. No alternatives, no negotiations, accept the score or don't get the loan. That system just changed. Trump's FHFA director Bill Pult approved VantageScore 4.0 for Fannie Mae and Freddie Mac loans for the first time in modern history. Lenders can use a competitor to FICO for government-backed mortgages. That single decision triggered a chain reaction. Here's the real story. One policy enforcement created 4 massive cascading shifts. Credit scores are losing their veto power, approval odds are changing, and the financial industry is in crisis mode. Shift 1. Death of the 620 credit score wall. For decades, 620 was a magic number. Below it meant no mortgage and no discussion. Income, rent history, and cash reserves didn't matter. One number logged millions out of home owners. As of November 16, 2025, Fannie Mae eliminated the 620 minimum credit score requirement for loans processed through the desktop. Underwriting, Freddie Mac did the same earlier. Instead of hard cut-off, lenders now evaluate your full financial picture, your payment history, your income stability, debt load, and reserves. Approval, however, is not affordable. You can get approved with a lower score, but interest rates are still risk-based. A high rate can make a loan unaffordable even if you're technically approved. Credit scores didn't disappear, they lost their veto power. Shift number 2. Banks are replacing traditional credit scores with AI. Credit score look backward. AI underwriting looks at real-time behavior. Banks now analyze cash flow, income consistency, spending patterns, rent payments, utilizations, and subscriptions. Millions of Americans were invisible to the old system because these factors were never counted. AI does not eliminate credit scores. It competes with them, and competition is exactly what the old system was designed to avoid. Here's the part most people miss. FICO defended its monopoly by arguing that one industry stand is more efficient. What that really meant was fewer choices for consumer. When Vantage 4.0 was approved, FICO and the credit bureaus saw their stocks drop. FICO responded by cutting out the bureaus and selling scores directly to the lenders. Shift number 3. FICO versus the credit bureaus. For decades, FICO scored the data and the bureaus distributed it. When competition arrived, FICO broke the alliance. Direct sales wiped out billions in bureau revenue overnight. More competition means lower margin means lower cost. And when lenders' cost falls, borrowers' costs should follow. If the lenders pass the savings along. Shift number 4. Multiple credit scores now matter, and yours might get higher. Mortgage lenders historically used 3 FICO scores and choose the middle one. That model is changing. FICO, Fannie Mae and Freddie Mac now accepted Vantage 4.0 and FICO 10T. Vantage scores included rent, utilization, and telecom payments. Many people score higher under these models, leading to more approvals, but also more responsibility with fewer regulatory protections. Consumers must monitor their own credit data and understand which score lenders are using. This isn't a kinder system, it's a smart one. People who understand it will benefit. People who don't understand it will get approved with bad deals or denied when they shouldn't be. This transformation is happening quietly, without headlines, without clear explanations. Banks will adapt, credit bureaus will survive, FICO will fight. The only real question is whether you understand these rules. Now you know where the battle lines should be drawn. The next move is yours, and the clock is already ticking.